Good evening, everyone. Hope you guys are doing well. Make sure you guys can hear me. All right, should be ready to go. Cut the countdown a bit early. Got things to do, money to make. So let's go ahead and get right into this one for this week. Looking good on my side. All right, should be up and running. Appreciate you guys tuning in here for our pre-market analysis. Again, sharing what opportunities we're looking at in the markets based off intermarket analysis, top-down analysis, and looking at several asset classes, right? So whether you trade currency, commodities, index futures, even really crypto, we've got you covered, and we're able to share where we think your respective market is going to go. So with that, we're going to go ahead and get right into this one. Going to start with dollar. Again, always start with dollar. Get our feel for the intermarket analysis side of things. From there, transition into the bond market, right, which helps qualify the dollar. And then as soon as we do that, for our Forex traders, you guys already know where the money's at in foreign currency, right? If you've been trying to buy foreign currency, probably haven't had a lot of luck with that, right? And there's a reason why we're trying to short currency. And that has to do with what we do with dollar, right? So once we cover dollar, bonds, you guys will know what you're doing on the currency side of things. And then we'll get into index futures. So for stock index futures traders, we got you covered, and we'll be giving you guys the winning lottery numbers as usual. But this probably will be the last time we'll be live here on Sunday, because I'm going to be taking this in-house and focusing on the community that I'm going to be working towards taking to independent traders. And speaking of that, we will be opening that up here today so that tomorrow you guys can be in our community shotgun with my team of analysts for live trading, pre-market analysis, reviews after the day so you know what happened and why it happened, and also to prepare you for the next day. So anything you could need as a developing trader, we're going to make that available. One thing I do want to get everyone's mindset appropriately, have their expectations, I guess, in line with their mindset. Because if you still think, for example, you're going to join a community and take 20 blind trades and just get rich quick over leveraging, then you're probably just not ready for our community yet. So we're here taking serious traders that want to learn, that want to do this independently, and want to learn from people that are carving out income consistently from these markets. And that's what we're going to be making available. But again, make sure you have the right mindset to learn. Blind trading, over leveraging signals, stuff like that does not work over the long run. But if you want to learn how to do this properly, watch someone trade, watch someone call a market day in and day out, then this is the place to be. So with that, guys, we're going to go ahead and get right into the business here. Ahmed, hello, Dylan. Ready to smash the new quarter? Absolutely. Glad to have you, brother. Olawale, happy Sunday. Happy Sunday, Olawale. Glad to have you. Tyler, my man, thank you very much. Chris, happy to see you. Top man, appreciate you, Chris. Sal, looking sharp, brother. Do pre-market skincare routine video. You're going to have to ask my lady about that one, Sal. But we'll have to do something like that in the future for you. Good to hear from you, Sal. Cyclops, happy Sunday, my man. All right, folks, let's get down to the business. Monthly chart for dollar. We called this month higher. And if you go back through the previous Sunday streams that we did, when this was a down close candle and it was creating the wick, or the low end parameter of what creates a candlestick, I was telling you guys that's making the low of the month inside of a bullish order block. And then you saw from there, we saw distribution to the upside. Right? Exactly in line with our expectations and our top-down perspective. So for the new month that we're going to open, I suspect we're going to want to work into these relatively equal highs above market price. But again, keep in mind, every candle is going to have an open, low, a high, and a close. So keep power of 3 in mind as we go into the new month. But those are my targets. That's what I'm looking for. Again, nothing's changed. So if you guys have been keeping up with us the past few weeks, you guys know we're calling weekly candlesticks on the dollar, all for free, right? Up, 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 up. And we're going to expect higher prices into the buy side. So we traded down. We took out the sell stops here, equal lows, ran those stops. So I'm confidently able to tell you guys accumulation at the lows, and we're likely going to see distribution at the highs. Very straightforward. Equal highs here is a target. Through that, we have these equal highs here at the 107 for the dollar index. All right, daily chart. Yes, we've been trading higher, but it's been just a slow grind higher, which is why I'm not terribly interested in trading currency. When you look at an asset class like dollar, and I know I've done this with you guys a few times, and then you look at an asset class like Nasdaq, it's night and day, right? Why would you want to trade something like this when you can trade something like this, right? But again, that's my opinion. I know everyone has their own markets that they prefer to trade, but again, I get asked a lot too, Dylan, why aren't you trading currency? Even though I can call it, I wouldn't touch this with a 10-foot pole because I don't want to trade it, but I use it for analysis purposes. And also I have people we advise with regard to where we think these markets are going. So this is helpful at a lot of different levels of this business. So saying all that to say, we're still seeing bullish order flow, higher prices, right? And bullish order flow is very simple, right? Down closed candles are supporting price. Obviously, there's a lot more to it, but the straight approach, down and dirty way of determining order flow are down closed candles supporting price. If yes, then that's why we're seeing higher prices. So I want to see us work up into these equal highs here going into next week, but it is non-farm payroll week, and we have July 4th. So bank holiday and non-farm payroll. So we'll see what they do going into this week. My expectations are minimal, but again, in the economic climate that we're in right now, anything is possible, right? So I don't want to say I'm expecting muted delivery, not expecting a whole lot, again, because in this climate, anything's possible. So with that being said, looking for higher prices and see if we want to reach up into those highs using non-farm payroll week. So hourly chart, again, continuously printing higher prices. Bullish structure, and now we're in this range. So I'll see what we do early in the week. We have equal lows, equal highs. So it'll be interesting. Do we trade down into the lows, reject, and then make a low of the week, and then reprice higher into the ultimate targets, or do we reach all the way down for this sell side and then turn and trade higher? That's what I'm going to be watching going into this week. You guys know it's non-farm payroll week, so I don't have that strong of a bias. I'm just keeping it close to the vest, and then going into the next few weeks as the month develops, then I'll be able to give you guys clarity. And again, really, it's the same thing as we saw last month, just so you guys have a reference for what I'm talking about. If I'm bullish, we look for a few things. We look for a low to be priced in early in the month. So from when we open the month of June here, what do we expect? The market to trade lower first, print a low. And that's how, again, the whole month of June, we've kept ourselves, our team on side, but also we've kept all you guys in our community on the right side of the marketplace based off those factors. So again, just apply the same thing going into a new month of July. All right, looking at the bond market. So I wasn't looking much at bonds or interest rates as of recent because they've been decoupled from the dollar. As of recent, we've seen them come back into alignment, which is something I want to see, which confirms higher probability action. So we saw dollar trading higher. We typically want to see, again, treasuries move against the direction of the dollar, and we've been trading higher on treasuries. So it hasn't been helpful to my analysis because dollar's been bullish like we have been. Again, we haven't deviated from that all month, but bonds were also trading higher. Again, just throwing a wrench in the engine. But now that we have bonds trading lower and dollar higher, that's starting to give me confidence that we're going to see higher probability market conditions because now the market's moving like it's supposed to do. So we saw a down week on bonds, and if that continues, we have these equal lows here, and then this weekly inefficiency to aim for longer term. And if we see bonds trade lower, then that's going to send dollar higher. Daily chart, market trades higher, clear out the buy side here and here, and then once we trade above that buy side, the market breaks down. Fair value gap, we hit it very heavy. So what I'm going to be looking for in here is we have a phantom trend line. Again, I don't trade trend lines, but I look to attack that logic. So if my analysis is already calling for lower prices and then I see retail ideas like support and resistance, I look to do the opposite. So we have a trend line. I'm expecting it to aggressively trade through that. And if we start to see escalation in war, things going on around the world, then that's going to accelerate what we're already seeing in dollar and crude oil, which I'm going to bring up here in a moment. So first target, we have the sell side here. Through that sell side, we have this fair value gap, and then the order block, and then we have the sell side down here. Those are my targets on bonds going forward. And then with the yield market, it's just going to be the same thing on the yields. So I'm going to be expecting yields to trade higher here, 10-year, 30-year, and 5-year. So again, if yields trade higher, that's going to be bullish and support the case for a higher dollar. Again, that's not all we use. We do use other components to our analysis like COTs, like seasonal tendency, and that is covered at length inside of our weekly newsletter, which again can be found on our website. And also more specifics with regard to how we're going to take on the week based off what the economic calendar is showing us. Yeah, I wanted to look at currency before I move into index futures. So looking at euro, we've seen relative weakness in euro, and again, that's because we've been seeing strength in dollar. I want to see euro accelerate lower. So as long as we remain below this inefficiency here on euro, we'll look for it to trade into its sell side here and here longer term. Again, assuming dollar continues repricing into those premium levels I outlined. And then same thing for pound. Want to see it start to accelerate again if we see that strength in the dollar. All right, monthly chart for Nasdaq. Let's look at the previous week. We'll again look back before we project forward. We traded down, hit this weekly fair value gap, took your attention to the bodies of the candles, respecting it, and then we traded through this up close candle, which confirmed it as a bullish order block. So when we opened, traded lower, called the low of the month there for you guys, and then from there we were looking for distribution higher, right? Nothing short was called on index futures other than just short term like equal lows, sell side liquidity pools. So we can even call the lows and when it's going to drop and retrace. But again, you guys know the bias has been bullish outside of a few retracements, which we also kept you guys ahead of as well. But based off what I'm seeing in the underlying market structure for index futures, we're looking north, we're looking higher until we see a decisive breakdown on that daily chart. All right, weekly chart, we had this imbalance. I gave that to you guys as the draw last week. You saw how we closed week on the weekly candle the previous week. And then that gave me the insight that the market was going to dig into that weekly fair value gap. We traded into it. We made a low of the week, and then we expanded to the upside in line with our bullish expectations. But again, also giving you guys the key levels that the algorithm is going to work with, right? So I'm going to watch how we trade inside this weekly fair value gap. Again, it's only the first week of the month, so going to be relatively patient. Nothing's changed in my analysis. We're still finding support inside this gap. Order flow remains bullish, so nothing changes in my analysis for the foreseeable future. Once we get a breakdown in index futures, then I'll consider potentially entertaining a top and then lower prices. But for the time being, trading the underlying market structure and order flow that the market is giving us. All right. Daily chart, those relatively equal lows. That's what I gave you guys as a target earlier in the week. And the reason being, it's pretty straightforward. If we're bullish, looking for higher prices for the week, which we were, we want to see a low form Monday going into Tuesday. Preferably that's going to happen into what? Into sell stops, right? Because there's equal lows. Trade into the sell stops. Who buys that when bullish? Smart money. Buying sell stops and then distributing it to the highs. So you see Tuesday, Wednesday, Thursday, all expanding to the upside, right? Giving range. Not all of them are up close candles, but each day gives room for expansion to the upside. So yeah, we remain in this range. So as long as we remain inside this high to low here, I'm going to suspect that we're going to remain in a consolidation range bound condition. So I want to see us either break the low or the high to the upside, and that'll indicate to me that we're likely going to leave the range that we're going to be in. So again, given that it is non-farm payroll week, I'm going to see how we trade at these key levels going forward. Order flow remains bullish. Inefficiency here, trade into it, use it as support. Again, rounding out that low of the week. And then from there, we've been seeing expansion higher. So I'm still sticking to my guns, looking for higher prices. Nothing's changed there, but I have to watch the order flow going into non-farm payroll week. And then we'll have more clarity going into the second, third, and fourth week of the month as we usually do, allowing non-farm payroll to do the damage and see what structure we have left after those key events. Yeah, so we remain in a range right now. So again, we made that low of the week on Tuesday, expanded higher, made the high of the week on Friday inside this imbalance. So we were unable to get above this imbalance here, stopping right at 50%. Again, that's not random. And then we've pulled back into the range. So again, as long as we remain inside this candle's high, this candle's low, we remain inside the range, 50-50. So what I'm going to have to do is have a scalper's mindset. So look at the hourly 15-minute chart and target obvious liquidity pools. until, again, we leave this range that we're in right now. Because right now we're stuck in between this imbalance and then this imbalance here on this time frame. So just because it's not clear and one-sided at the moment doesn't mean it won't be. But again, just sharing with you guys when it is uncertain or I don't know immediately where it's going to go, right? Because again, we just called a monster move on dollar, calling it higher all month, on Nasdaq and S&P, calling it higher all month. So keep in mind that once big moves happen, you then have to wait for more information, right? You don't just call out thousands of handles every single week. Markets don't work like that. They expand, they consolidate, they retrace, and they reverse. And that happens in cycles. So once we've already called out, again, a huge expansion move the entire month, which we did from the beginning of June, and then we called all this run higher. We gave you guys targets that you could use for fib projections to the upside. But now that we reached those targets, we have to wait for more information, right? These big runs like we're able to call out for you guys don't happen every second. They take time to develop, and sometimes you have to be patient and wait for more information. So that's what I'm providing you guys here, insights into how markets transition from expansion to consolidation, but also knowing, again, how to manage those market conditions. So consolidation profile can be traded, but what you don't want to do is get caught off guard by it, right? And then you try to hold for a big run, get chopped up, and you guys know that's never good. So understanding market profiles are essential in your trading as well. So that's the business for Nasdaq. Going to stay in the range and going to see what we do from here. Right now, it's not obvious. Right now, we have equal lows here and here. I want to see how we trade there. If we accelerate, then we have these equal lows here. And I'm just going to have to take it day by day, session by session. But as we start to get clarity, I start to see the dynamics and price that I look for and my team looks for. We'll then send you guys updates as it becomes appropriate. All right, S&P, really same thing as Nasdaq. So just going to look to breeze through this one. Same thing, monthly chart retraces to its imbalance, expansion on the monthly candles, as our analysis has been calling for. Weekly chart, this breaker here we were watching, these two up close candles, fair value gap support, and then we've seen expansion higher. So we've seen expansion on the weekly candle for the first week, second week, third week, and then fourth week as well, giving range to the upside. So analysis, again, panning out perfectly on index futures. And what I'm going to be watching is this fair value gap here below market price. It may not get down to it. Nasdaq already did. So what that could be is a large SMT, where S&P is not going to make a lower low and it's going to remain bullish. So we'll have to see how that pans out. If S&P does trade into that gap, then I'm going to monitor how do we trade there. And that's going to give me insight going forward on what it is that I'm going to be looking for a longer term projection for index futures. So daily chart, we've been inside this imbalance here, this gap, and then we just really stayed inside it all week. We did make a low on Tuesday, expanded higher through Friday, and now we left relatively equal highs here, and now we're back inside this gap. So again, you guys can see we're in a very clear range-bound market condition, right, where we're in between this candle's high, this candle's low, and we're just in a range right now, and we're going into non-farm payroll week. So I wish it was. I wish trading was just always a sugar high, right? We have targets. Look, oil's going to run here. Indices are going to run here. Dollars here, and it's just a big party, right? I wish trading was like that as well. But again, we have to navigate market conditions and how those change and adjust. So if I don't have any one-sidedness on the market, I have to wait for more information. Dropping down into the hourly chart, just like we saw on Nasdaq, those equal lows. We also have relatively equal lows now on S&P. So that's going to be an interesting potential trade setup going into Monday. Looking at these equal lows, stopped just short of it here on Friday, and now we pulled back into the range. So I want to see if we work our way down into that sell side early into the week, and then I'll see how we trade from there, right? Do we hit the lows, reject, trade to the upside, and make a low a week and then reprice above these equal highs here and here? Or does the market trade down through it, accelerate, and keep cratering? Those are factors I'm going to be watching out for going into the week ahead. All right, let's go back to dollar. All right, so if you guys remember last week on wheat, talk about some of the markets and the call outs I gave you guys last week. You guys know I was taking your attention to this market maker sell model and how we were looking for a repricing. And let me get off the continuous and go to the official contract. And then again, we were looking for a repricing down into these lows here. You see just nice delivery, market maker sell model, expansion to clear out this original consolidation here. So the analysis on wheat killed it, delivery into the lows. And now that we've reached targets, again, we have to be patient, right? We've just called a monster run on wheat. So now we have to be patient and allow the next run to manifest itself. So that's the business there on wheat. And then last, I left you guys off on crude oil as well. Told you guys crude oil is bullish, looking for higher prices. And then we saw expansion week here on crude. So now we have a small imbalance here. It can trade down into this, but it should go no lower than this imbalance here. So it can hit it and then expand to the upside. But I would need to see bullishness inside this price range of, we'll call it 79 to 80, 20. So it took you guys' attention to these gaps as well, saying we didn't want to see it fill in. So you guys knew you guys didn't have to worry about the market trading all the way down here trying to fill in these gaps. How do you know which gaps fill in, which don't? That has to do more with market structure and understanding how to read that and where gaps are in relation to market structure. So because obviously these gaps are higher, there's a breaker there. I'll give it to you guys for free. We don't expect the market to come in and fill these gaps. Imbalance, we trade into it. Market's bullish, so we expect it to do what? Lend support, and then we get expansion higher. I gave you guys upside targets of 83.55. Through that, we have 84.73. And then animation through that level takes us into the 86.23 level. Longer term, zooming out on crude, we have $92 a barrel above these equal highs here and here. So I'll look for 92 a barrel. If things start to pick up around the world, hint, hint, nudge, nudge, then we can see crude oil priced into triple digits and even 125, 150 a barrel, just like that. Will that happen tomorrow? No, but definitely be on the lookout for that this year. And if there's opportunities, I'm going to take advantage of it, and I'm going to make sure I keep my community up to date as well. So that's what I'm looking for longer term. On crude, of course, order flow has to remain bullish for that to remain valid, but that's what I'm looking at for the foreseeable future on crude oil. Hourly chart. Yeah. Yeah. All right, so hourly chart, we broke down after taking out a key buy side liquidity pool. And what liquidity pool was that? All right, let me take that off. So equal highs, we traded up into that on Friday. So again, continuing the bullishness, Friday made a high and then we broke down. So what I'm going to want to see here for crude oil on the hourly time frame. And again, I can still remain longer term bullish and I can still call short term lows, right? Think about Nasdaq last week. What I give you guys? I told you guys the winning lottery numbers on Monday was the equal lows here. All right, equal lows. Told you guys I'm looking for a setup into these lows early in the week. So when we have an imbalance here, told you guys I want to see us stay below the fair value gap here. And I gave that to you guys last week. And again, I'm just giving you guys an example as to how I can still be short-term bearish, but long-term bullish, and how that plays into each other. So I told you guys, if we remain below this imbalance, these equal lows are in the crosshairs. They're on the agenda. Delivered that, and I was trading that on Monday. And then we priced in that low of the week. So really, same thing here on crude oil, right? So I can still be long-term bullish, looking for triple digits in crude. But short-term, we can see short-term retracements and, really just retracements. So if we remain below this fair value gap here, we have these equal lows here to clean up. And then if we're going to remain longer term bullish, and I don't like to project too far out because things change, right? Markets are dynamic, but I want to see us run into these lows. And then I'm going to see how we trade there. So do we hit these lows and then reject and continue to the upside? That's what I'd favor seeing. But I'll have to see how we trade at these key levels, right? So if we get a run into the sell side, that's perfect, right? That'll give me a trade or not that I'm going to be trading crude, because if I have clean one-sided drawn index futures, then I usually don't even worry about it. However, if index futures aren't that clear, which I'm suggesting they're not to me at this moment, I will opt to trade something like crude oil. but it'll have to, again, give me a one-sided setup that I'm able to justify and that I'm comfortable putting that risk behind. Then once we get down below these lows, then it'll be appropriate to see, okay, how do we trade here? Do we start showing bullish price action and turn and continue to reprice higher to our longer term targets? So that's the business. That's how you're going to want to weigh these factors out going forward. So that's everything I had to share today. Let me double check. Yeah, last I shared gold for you guys. Let me go to yeah, so seeing an expansion lower on gold, but this is again why I don't like to trade it. It's just a nasty market. Sideways, not doing a whole lot. We have these equal lows here. If we continue seeing strength on dollar, then I'll suggest gold will probably look to trade below those lows. Until we leave this range, though, I'm not interested in risking any money on gold. So none of my analysis that I share on gold, I'm actually putting real money behind. Everything else, then absolutely. I'm in here, I'm trading these markets, and I'm fleecing them for my pound of flesh. But these markets, not interested in. All right, let me go and take a few questions. Then I got to get going. It's been a busier than usual Sunday here on my end. Getting business here sorted out. So newsletter will be up at 8 a.m. as usual, fresh off the press, and you guys will be able to have those insights there as well. So other than that, I think that's all I had to share here today. So I'll go ahead and get to some of your guys' questions here now. Armin, do you trade in crypto markets? And if you do, can you please look over Bitcoin chart? So no, I do not trade the crypto market, but I will gladly look at the Bitcoin chart for you. All right, weekly chart. We have a. All right, let's actually go up to the monthly. So we expanded higher, took out the buy side above this high here. Now we just pulled back into the range. So unable to really show decisive continuation. And right now we're just in a range. So as long as we remain inside of this high and inside of this low, Bitcoin remains in a consolidation range, right? And obviously, well, that's obvious, right? If we don't break out, obviously we're in a range. But the way that's helpful is that you don't touch the market until we leave these ranges. Because if we do try to trade inside these low probability ranges, it's really easy to get just chopped up. And so to avoid those market conditions, we tend to want to focus on markets that are expanding, right? Not markets that are just staying in a range. So looking at Bitcoin, I wouldn't touch this with the 10-foot pole. I don't know why this, for some reason, like text comes on my fib tools. I don't know. Oh, there it goes. I guess that's a new feature. I was like, where's that text coming from? So yeah, as long as you remain in the range, not interested in Bitcoin because it's just in a lower probability market condition. And right now I can justify both sides of the market. We're in close proximity to this sell side here. And then if we get animated through that sell side, these lows here are awful smooth at the 50K level. But again, that's only if we start to accelerate on the downside. But we also have these equal highs here. So that doesn't sound like my usual analysis where it's going here, this is the invalidation level, and these are the targets. I don't have that in these type of market conditions, so it's just a matter of waiting and seeing. If you know how to read order flow, Armin, then I would just watch the institutional order flow. If it remains bearish, look for sell side targets. If institutional order flow then turns bullish, and you start to see bullish market structure in addition to that, then you can look for a run into those highs. So that's what I'd be doing with Bitcoin. Matthew, so you wanted to take a look at Ethereum? Yeah, let's take a look at Ethereum. Yeah, same thing on Ethereum. Two-sided market condition, equal highs, equal lows. You'll just have to resort to reading order flow to get a feel for what draw and liquidity it's likely to reach. So even when it's 50-50, right, it's not to say it can't be traded. It's just important to recognize it's a lower probability market condition. So you probably don't want to size up a whole lot. You probably don't want to have your highest trade frequency, and you just want to scale it back. So that's what you do with that information. But again, for ETH right now, equal lows, equal highs, and I don't see an obvious clear path to a one-sided liquidity pool. We have just traded into this bullish breaker here, and we're showing support here. So when I say rely on order flow, Matthew, I know you've been trained properly, so you already know what to look for. So study order flow around these key levels here. If we find support, then we're looking for the highs. If order flow remains bullish, but then if we start breaking down and then we see bearishness in the order flow, then that can make a run into these lows. So you see, it's just a bit more nuanced analyzing lower probability markets. It can be done, money can be made, but you just again have to recognize that it's lower probability. All right, so that's the business on crypto. That was insightful for the crypto folks. Anita, hit that like button. Thank you very much. That is greatly appreciated. So as a general reminder, please do hit that like button. It helps us out here. And I know a lot of you guys are getting good value from what it is we're doing. So I'd appreciate if you could reciprocate the love and hit that like button here for us. Cyclops, give the stream a like, guys. Thank you very much, sir. Appreciate that. Islam, how do you analyze crude oil using intermarket relationship? So what I use for crude oil is I'll use a basket of commodities. So the CRB index is one I'll use, but any basket of commodities that tells you the general tide and direction of the commodity markets is going to be a good indicator, because basically what you want to do, it's the same thing like the stock market, right? Like for example, if we see a down day, like here's indices and then here's stocks. These are stocks I watch. Let me make that big so you guys can see that. If index futures are down, which we see here, what's more likely to happen for stocks? Are they going to be bullish, or are they going to more likely sell off? More likely sell off, right? And then we see here Apple, Microsoft, Amazon, Google, Nvidia are all predominantly red. ExxonMobil isn't red, and I'll let you guess why. It's because oil is bullish, right? So that's why oil's not red. So that's an exception. ExxonMobil is an energy company. But other than that, everything is red, except Tesla, slight positive. But everything else is deep red. Why is that? That's because all boats rise in high tide and drop in low tide. So if index futures are rallying, which is the S&P 500 companies, Nasdaq 100 tech companies, and it's dropping, what does that suggest about the underlying individual stocks? They're probably weak as well. So you just do the same thing with a commodity basket. So the CRB index was what I was using. And then you can use that in addition to whatever you're looking at as a commodity and use that to your advantage. Another intermarket analysis you can use is dollar. So the same way we almost look at foreign currency, you can use dollar to map out where commodity should likely go. And if you think about it, the reason being is because of the relationship of all these commodities being priced in dollars, right? Oil's priced in what? In dollars. Wheat, grains, copper, cattle, palladium, gold, it's all priced in dollars. So if dollar is bullish, then commodities that are denominated in dollars are probably going to have a harder time to rally. So you can even use dollar and bonds when you're looking at commodities. That's a bit more advanced, but there's levels to the game, and I'm here making it available. So Islam, that's what you use for crude oil. ICT, dollar CAD. Yeah, let's take a look at dollar CAD. Man, I wouldn't touch this market. There's nothing on dollar CAD that I see. This looks like a heart attack, and trading it will probably give you a heart attack. Same thing as I gave you guys on other markets that are in consolidation. Define the highest extreme high and the lowest extreme low. Wait for us to leave that range till you start trading it. Can you scalp, find surgical moves? Absolutely. But I don't like the Mickey Mouse around with just a few handles. I like 100 handle runs. I like big moves. I don't like to mess around and waste my time. And this is a market that is a waste of time to me because of how it's moving, right? There's much better asset classes to trade than dollar CAD. And if this is all you can trade, then man, I feel bad. But yeah, there's nothing I have. If I called markets like this, just so you guys can have a greater appreciation, if I called markets like this to you guys, you would not be here watching my stream because it would look like amateur hour. So I know what markets I want to call, what are high probability conditions, and what are low probability conditions. And if it's low probability, I know what that looks like and when to just step aside and not look to put a lot of risk there. And this is a market that, again, I would not touch with a 10-foot pole. Burgess Bitcoin, already took care of that. Jesse James, do you live stream? Yes, sir, on my Discord. Moen, what kind of risk management do you recommend for prop trading? So I personally don't recommend any risk management. Usually what I would do in that type of situation, Moen, is I'd have to get more of a feel of where your experience is at, what your tolerance of risk is, and really how much you know about the markets, right? And then all those things would really determine whether you use high-end or low-end risk. So typically what I do whenever I'm working with someone or I'm coaching them and I get that type of question is I have to ask the right question so I can get a feel for where you're at. And then usually I'll be able to help you come to your own conclusion so that you know what you should be risking, again, based off experience level and several other factors. But in my opinion, no more than 1%. I mean, if you're risking, and actually, now that I'm answering the question, I don't even know if it's a Forex prop firm or a futures prop firm. So even that depends. So there's just a lot of factors, Moen. Kingsley, hey Dylan, what's up? What's going on, brother? It's actually not Kingsley, it's Ben. Appreciate you correcting me in my DMs. Hey Ben, hope you're doing good, brother. Matthew, same with Ethereum. Covered Ethereum for you. Daniel, you mentioned this is the last Sunday on YouTube. Yeah, I'm not sure what I'm going to do moving forward. I've been discussing with my team, haven't decided yet if we're going to just do the live stream in-house and then maybe upload the recording for you guys after, for those of you guys that would want to see it after it was recorded. Because again, I still want to help you guys out, for those of you guys that can't invest in yourself properly, because I know how it is. I know not everybody is able to properly invest in themselves, shorten their learning curve, and learn how to do this the right way. So that's why I take my time to come out here on YouTube, and that's why I make resources available for you guys. So I haven't decided what I'm going to do yet with that, if I'm going to just make them available after the fact, and then you guys can just watch the replay, or if we're just going to keep it all in-house, because you guys would be surprised at how many people look at this analysis and look like $1 million in their own private groups. And I say that because imagine if you take my analysis that I'm giving here on Sunday and you put it in your own group on Monday morning. So people look like $1 million, right? So I can't have that happen, and not good for business. So not sure what I'm doing there yet. That's what's on my mind, but I am focused on making sure that hopefully you guys can have what you need. Inner Circle Treasure, bro, with time, these markets show you both sides of it. When everything is in line, but you don't profit. Inner Circle Treasure, not having a hard time understanding your first question. Eslam, do you use Canadian dollar for crude oil? I personally don't look at it as much using Canadian dollar for that, but they are definitely correlated because it is a commodity currency. Absolutely. So you can absolutely use that. For me personally, dollar gives me the insight I need for that, but it just depends on what's comfortable for each person. Inner Circle Treasure, like a seed planted, it has to experience all weather conditions and endure through to make harvest. How did you handle yourself prior to having confidence in the markets? So prior to having confidence in the markets, I was just studying, I was learning. And whenever you're in a development phase, you don't have a whole lot of confidence because you don't really know what you're looking for. You haven't done it 1,000 times. So there's just not a whole lot of confidence behind it, right? Because confidence all comes down to your skill set. You look at someone like Steph Curry, LeBron James, why are they confident when they walk out there? Because they've done it 1,000 times. Tom Brady, when he goes out there, or a famous soccer player, whatever the case may be. They are confident because of the amount of preparation they've put into what they do, right? Same thing like a doctor or a lawyer, whenever they have a big surgery or a big court case, why are they confident? Because of the preparation they put into what they're about to do. Trading's no different. So if you've just been studying a month, well, you're basically a lawyer who dropped out of law school, and now you're in here swimming with the sharks. And if you're in the markets, you're swimming with the sharks. And you're doing it with no preparation. So of course there's going to be anxiety, fear, because you're just not really sure what you're doing yet. So the way I handled myself before I had confidence was I did things to gain confidence. I was tape reading. I would watch the markets. I would study my ass off to make sure I could learn to do this at a high level and have the confidence that you see me displaying in my trading now. So if that makes sense, Mr. Treasure, ICT, oops, thanks. Yeah, absolutely. Glad that was helpful. Hey, it was a good question, man. You know, not everyone has the same ability to analyze, right? If I was looking at this market, you know, 4 or 5 years ago, you know, maybe I would have thought it was good to trade as well. But the more you know, you're able to better protect yourselves from high risk, low probability market conditions. Jonathan LMAO, who trades that? You would be surprised, brother. You would be surprised, my man. Man, I still get people asking me about gold all the time, man. And just look, it's a, it's a turd. It is what it is. Hey, Dylan, are the free community paying too? Oh, Matthew. Yeah. Brother, you let me worry about that, brother. You focus on your end, man. I want to see you be a trader, killer trader, and I want to see you at the top of the prop firm, brother. You let me worry about handling the business. Ann, this has been so helpful for the past weeks. Thanks, Dylan. Appreciate that, Ann. Glad it's helpful. Chris, we appreciate your time with us. Please carry on like that. For me personally, helps me a lot. Thanks, Chris. Really appreciate your guys' feedback and that it is helpful for you guys and me taking my time on my Sundays to get out here with you guys. Thank you very much, Chris. Matthew, so to clarify, despite wartime efforts, dollar, oil hasn't changed at all. I thought they would be more correlated than normal. So typically, as I was saying, if dollar's rallying, that'll put a bit more pressure on commodities because commodities, again, are denominated in dollars. However, with the current climate we're seeing now, as you pointed out, Matthew, with regard to the war and saber rattling and threats and just everything that's going on that side, dollar and crude oil will go up together. Reason being, if you look at the war machine, and the war machine being what, like the U.S. military, militaries all around the world, what do they need to run the military? They need oil, and not just a little bit of oil, lots of oil. So whenever war starts happening or threats start happening on one side to the other, you notice oil starts going crazy. Why is that? Because speculators and obviously market makers are taking advantage of that sentiment, but the fundamental reason behind why oil goes up when war escalates is because now you got to power the war machine, right? Those ships, those planes, those tanks, they don't drive themselves. So now there's a higher demand for what? Crude oil. So also, dollar goes higher when war happens. Why? Because people want to invest in safety, using the dollar as safety. So money goes into crude and dollar. So you can even see them move together and you wouldn't see that typical intermarket relationship. And again, you can see how nuanced trading in this environment is. So those things are factors that just make it a bit more difficult, but you can see us call, for example, we called the up close candle last week on crude oil, and we did so on dollar as well. So it doesn't always have to be perfectly related. It just really depends on the climate and what's going on there. Not been an easy year to call the market, right? We've been having to call dollar higher the whole month and Nasdaq higher at the same time, right? When have we ever done that? But like I told you guys, it's going to be a wild year. So strap in. Eslam, great session, Dylan. Thanks for the info. Absolutely, brother. Matthew, okay, good to know. Just trying to understand the intermarket analysis for when a high resistance liquidity run versus low resistance will be likely. Yeah, I got you, Matthew. And if you have any more specific questions to that, we can go ahead and look at that on Zoom or in the Discord for Q&A as well, because I do want to make sure that you're able to take away that understanding and that you can see how these nuances piece together. Daniel, we appreciate you, Dylan. Please don't forget us, YouTube family. I'll do what I can, Daniel. Absolutely. Daily, thanks for the analysis. At least I gained a lot on the DXY bonds and yield correlation. Absolutely. There's levels to the game, and we're just making some of it available. Zoe, what do you think about Japanese yen right now? Just came in. Sorry if I already talked about it. I have not talked about yen. And Matthew, can you cover my Discord question real quick too while you're here? Absolutely. I'll go ahead and do two birds with one stone. So yeah, let's look at dollar yen. So we've been bullish on dollar. So if we've been bullish dollar, this currency has what? Dollar in its name first. And the yen has just been getting pummeled. And dollar strong. So yen's getting pummeled, dollar's bullish. So zooming out, yeah, yen is just ripping. So look for higher prices on yen. Order flows remaining bullish, so everything's green light for higher prices on yen. And again, this is all supported with the strength in dollar we've been seeing as well, right? So these factors come together, and it's because yen's second in the name, dollar strong, so that's going to, again, put pressure on yen. Bullish order flow, so looking for higher prices on yen. And yeah, this thing is bullish. We've just reached key target here, so that'll be influential to watch. Watch this fair value gap going early into the week here for dollar yen. But as long as dollar remains bullish, which we're expecting, dollar yen's going to keep ripping higher. So down close candle, fair value gap, find support. Same thing here. So we have this imbalance. If we're going to remain bullish, which I suspect we will, I want to see us hit the gap and just keep mooning. If we trade through this fair value gap here and this down close candle, then we can trade as far down as to this imbalance here. And then I'll have to see how we trade there. Do we create a low and turn higher? Those are the factors to watch for dollar yen. But again, the reason we have been bullish, if you have been a dollar yen trader, the reason we're looking for higher dollar yen is because, again, the relationship between those currencies. And yeah, let me take a look at your question on the Discord. Hey Dylan, for Monday's short, I wasn't able to trust from the hourly chart because we were consolidating on the Nasdaq. The fact that S&P made an S&P gave me clarity, right, with the market maker sell model. My question is, are there instances where both ES and NQ won't run any high and just dump from the consolidation? Where they both won't dump? See, that doesn't happen very often. Let me go and show you guys what it is that I'm looking at. So let's go to NQ. Then we have to go early in the week. So we're talking about Monday's trading. And then we're looking at the shorts that we were looking at into these equal lows, which is, again, that's all on the YouTube. So we did time travel last Sunday and tell you guys where the market was going. So that's what we're referring to here. So my question is, now that you guys can see it, and let me actually overlay that with S&P. All right, so now you guys can see that. Wasn't able to trust shorts because we were consolidating. Right. So you see Nasdaq did not take out that high, whereas S&P did, which is what indicated Nasdaq didn't have to run the high. So sometimes I'll get asked, well, then doesn't the market have to take out the high then drop? Not if a correlated asset does it, which ES did. Instances where neither of them makes a high, that's not likely. And if there is, then usually Dow is at least making an SMT. Then I can use that to hold my hat on for the shorts. But if we don't get any of them doing a divergence, that's possible. I've seen it, but it's not likely, and it would just give me a bit less conviction if I didn't see those factors. So I knew the draw was lower, but couldn't frame the risk on the hourly perspective. I gotcha. Yeah, so S&P took out the high, Nasdaq was unable to, so I see how it'd be unable to frame the risk because you're concerned about it trading up to the highs. But again, the key thing to keep in mind is they're in a hurry to reprice it lower. Why? Because there's traders with a buy stop here. So once they make the SMT, it's just going to sell off aggressively and reach for those lows. And again, that was further confirmed with that divergence there at the highs. And then what you can do is even go into further market structure. All right, like if you see like that 10 a.m. candle, which is mostly when it is that we're looking to do our business, we trade up into this imbalance here, and then we break down. So you can just trade, again, the distribution hour 10 to 11, and just catch that expansion there down into those lows. So you can see, okay, trade higher, we rejected the imbalance, broke down, go into a lower time frame, and study a market maker sell model now on that fractal. So that's something you could do to study it, but going forward, keep in mind, Nasdaq does not need to take out that high because ES did, and then you can use your lower time frame entry models to get in sync with that move. Oh, it's hard to frame the risk short for a swing trade short. Yeah, exactly, and that's why trading counter trend to institutional order flow, it's not easy to swing trade, right? Because it's just going to be a short-lived drop. It's going to be a drop to rally. So we want to position most of our swing trades going to the continuous contract. We want to place our swing trades in line with institutional order flow. So up, up, up. So once we drop down into those lows, the best swing trade would have been long from there. Can you trade short? Absolutely. But trying to swing trade short and hold for a big run isn't as easy to do, especially when we're talking about trading counter the underlying institutional order flow. So even swing trading would have been hard for me to trust there. The only way I was able to trade it was because I'm able to see this intraday, and then I'm just catching a leg down on a 1 minute, 5 minute chart based off all those factors. Matthew, okay, thank you. Yes, sir, absolutely. Oh, it's not Zoe, it's Zoo Escape. Sorry. Zoo, they have been talking about intervention, but they passed 160 without considering not touching USD JPY. Yeah, I don't personally like yen pairs that much. They're highly manipulated. I mean, obviously everything is, but especially these pairs here. But yeah, as far as intervention and central banks and what they're saying, I don't worry about that. In my opinion, that's all noise. What I look at is what the chart's telling me, because the chart's going to tell you everything you need to know, and the misdirection, the smokescreen, the manipulation is happening when those people speak. So what we don't want to do is take them at their word and listen to what they're saying, right? Because you typically want to fade what the general public is doing, right? If 95% are losers, we don't want to follow the crowd. We want to do the opposite. So hopefully some insight there, Zoo, for trading yen. Thank you for doing, thank you for the stream. Doing anything fun for the 4th? Yes, sir. I will be flying up to Ohio to visit family. So I will be traveling for the 4th of July. So that'll be fun. Looking forward to visiting family. Hope you're doing something fun as well, Matthew, and hope you had a good time at church camp, my man. So alrighty, guys, that is it from me. Don't see any more questions. Do appreciate you guys joining us. We will be back to business. I'll speak with all you guys tomorrow morning. Send you guys pre-market analysis, and I'll probably send a Zoom link so we can do some live trading in the AM session, because you guys know the protocol and you guys know the business for non-farm payroll week. So with that being said, hope you guys have an excellent rest of your Sunday, and I'll speak with you guys tomorrow. Take care, guys.